Hello, traders, and welcome back to the Forex Geek, where we dive deep into the tools that can help you make smarter trading decisions. In today's video, we're going to be talking about the MACD price action strategy, which is a powerful approach that combines the precision of price action analysis with the momentum tracking capabilities of the MACD indicator. So, if you're looking for a reliable way to identify high probability trade setups while filtering out false signals, this strategy is exactly what you need. Stay with me until the end of the video to learn how to apply this step-by-step method effectively and avoid common mistakes that could cost you valuable trades. So without wasting any much of your time, let's get started. First of all, we're going to go back to the basics and explain MACD and price action. And you can see this indicator on the chart, that is the MACD, and this is a widely used momentum indicator in technical analysis. It helps traders identify trends, measure their momentum, and determine potential entry or exit points in the market. So the MACD consists of three main components. We have the MACD line, which is the blue line. We have the MACD line, which is the blue line, and this line is calculated by subtracting the 26 period EMA from the 12 period EMA. It reflects the difference between the short-term and long-term price movements. Also, we have the signal line, which is the orange line, the orange color. And this line is a 9 period EMA of the MACD line, which acts as a trigger for buy or sell signals. Now we have the third component, which is the histogram, and this visualizes the difference between the MACD line and signal line, helping traders gauge the strength of momentum. And that is that for the MACD. When the MACD line crosses above the signal line, it suggests bullish momentum, while a cross below indicates bearish momentum. Additionally, when the MACD moves above or below the zero line, it signals whether a trend is bullish or bearish. Now, you should note those key criteria in mind. We're going to be using them in the next section. Now, the next is price action. Price action is a word that is used without context these days in the markets. So let's explain price action and how it pertains to the strategy which we're going to talk about. Price action is a trading methodology that focuses on analyzing raw price movements on a chart without relying heavily on indicators. It involves understanding market behavior by studying patterns, trends, support and resistance levels, and all of that. Price action reflects all market participants' decisions and provides traders with insights into market sentiment. So key elements of price action include trends, identify whether the market is in an uptrend, downtrend, or range bound. Now, just like I drew some seconds ago, this is an uptrend, as you can see here. This is an uptrend, and here you have this. This is a downtrend. We are in a downtrend here. Those are trend lines. We have support and resistance. Now, support, you can see this can be used as resistance. Have price respecting this area and failing to go above this level, using that area as a resistance. And also, you also have support, where price uses a particular area for support, fails to go lower than that level, and uses that area to bounce off price. You can see we are bearish, 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 bearish. And came here, had this consolidation, price refused to go below this level, push the upside. That is support and resistance. We also have candlestick patterns like the engulfing patterns, the three inside up candlestick patterns. You have this bearish engulfing candlestick pattern here, which is widely used in the market. You also have rejection candlestick patterns like this one, rejection candles actually. And this is a three inside down candlestick pattern, which is the first candle is a green candle, the next two candles are red candles closing below the first candle's low. So these are all candlestick patterns that can be used in the market. They're all price action, they're part of price action. So how can you trade with the MACD and price action? Let's get into it. The very first step is to start by determining the overall trend in the market. Are we bullish or are we bearish? This is crucial because the MACD indicator works best in trending conditions. Use a higher time frame. As you can see, we are on the 4 hour, or you can also use the daily time frame. So this will help you assess the trend better, and you can also use indicators like the moving average to assess the trend. So I'm going to use the exponential moving average, and you should use the 200 period moving average to assess the trend, to tell the trend whether we are bullish or we are bearish. Now the 200 EMA checks if prices are you should check if price is above or below the 200 EMA. If price is above it, it indicates an uptrend, and if it's below it, it indicates a downtrend. Just like you can see, price being above this EMA suggests that we are in an uptrend and we should be looking for higher prices. So this helps us tell the trend. You can also use the MACD zero line. Look at the MACD indicator, and if price is above, if the MACD line and the signal line is above zero, it means that we are bullish and we should be looking for buying opportunities. And if we are below zero, it means we are bearish and we should be looking for selling opportunities. So you can also check the trend by using price action, the price structure. Confirm the trend by observing higher highs and higher lows in an uptrend, or lower highs and lower lows in a downtrend. You can see that happening here, a series of lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. You can also use the market structure to determine whether we are bullish or bearish. Now, after the first step, which is identifying the market trend, you should wait for a pullback. Once you've identified the trend, as you can see, we've identified that now we are bearish. The 200 period EMA shows us we are bearish. The crossover here shows us we are bearish, and also being below the zero line shows we are bearish. We have the MACD histogram bars high enough, showing there's enough bearish momentum in the market, so we are bearish. So after being bearish, the next thing is to wait for a pullback in price. So once you've identified the trend, wait for this pullback to key levels. Key levels are support and resistance levels. Could be support levels in uptrends or resistance levels in downtrends. So looking for these key levels, I'm going to mark out some key support and resistance levels. We have a break of structure to the downside, break of structure to the downside. So you can see series of break of structures to the downside, and this is a trend. This is a bearish trend. We have price tapping, giving us multiple taps. So as we have price pulling back up to this trend line, we could look to enter a sell trade from this tap here all the way down. We have another pullback. We look to enter a sell trade from this tap right here all the way down. Right trend. You can also see this dynamic price reacting to the dynamic support level here and giving us this our price giving us this evening star candlestick pattern, indicating that we should be looking for selling opportunities. Our price giving us the break of structure to the downside, indicating that we are indeed bearish, so we should be looking for selling momentum. So you can see price reacting off of this support tone resistance. We can also use that to sell, as that is also a pullback. So you trade from pullbacks after confirming the trend. The first step is to confirm the trend. Are we bearish or are we bullish? After confirming that we are bearish, you wait for pullbacks and enter in line with the trend. You can see we have series of pullbacks here which we can use to continue this trend. This this right here is a major resistance level. You can see price reacting off of it here, and if you look to take that sell trade, you can also see all of these were used as liquidity in the market for this major sell move. For liquidity traders watching this video, I'm sure you understand these are areas where price induced traders for the bigger sell. And we have the MACD showing us is switching to the bullish trend here. We also have price moving above the 200-day EMA, showing us we may likely switch to the uptrend. Then after that, we have this ranging market. It is not advisable to trade in ranging market. Wait for when the market is actually trending before you engage the markets. We have price moving above the 200-day EMA here. We also have the MACD line crossing above the zero line here, showing that we are now bullish. What's the next step? The next step is to wait for pullbacks. Now, after this, we have this pullback, this minor pullback happening right here. This is minor pullback happening here. So if you look to take that, buy from there, you can see this uh price reacting off of key levels here, and you can use this to place your buy entries from this area all the way up. You can also see this engulfing, bullish engulfing candlestick pattern here, which we can also use to engage this market. You have this hammer candle. You can see the hammer candle right there, very clear. You can also use that to engage the markets. So many ways you can use to engage this market. As we have confirmed that the trend is bullish, we have the momentum, we have trend strength, and everything is on point. Next is to wait for those pullbacks. You can see pullback happening right here, so you can just mark out your support level here. See price pulling back to the support level and putting up our buy order there with stop loss below that key level, taking a quick scalp of 1:2 risk to reward ratio. And that's how you can use the MACD price action to trade. First of all, you confirm the trend with the MACD, then you follow through with price action, what is happening on the charts, support and resistance levels. Are we bullish? Are we bearish? What can you see on price and also on the MACD indicator? So that's how you can use both of them to trade and take profits in the market. Alright traders, you've come to the end of this video. Engage with us in the comments below. We want to hear about your experiences. If you found this video helpful, don't forget to like, subscribe, and turn on the notification bell so you never miss out on more trading tips and strategies. Thanks for watching, and I'll see you in the next video.